morning, everybody. I'm Mike Montgomery with Kind Lending, and I'm with Corey Krickeberg with Goosehead Insurance. Today we wanted to just chat a little bit about insurance, and Corey's been so gracious to do that with us today. So, Corey, you want to tell us a little bit about you and about who you work for, and then we'll get into some of the...
Yeah, that's great. So appreciate the introduction. I work for myself. I own my own agency. So one of the great things is you're talking to the owner, you're talking to the person that actually makes the decisions. So I've been doing this since 2019. I worked at Liberty Mutual, decided to purchase my own agency. And one of the biggest reasons is I have like a lot more carriers. So I have more options, and I'm on my client side. I'm not beholden to any one carrier. Right. I'm on your side, I'm on my client side. Do the best thing for you as you see fit.
Fantastic. And, a lot of people are confused about insurance. One of the biggest things we get, well, I don't really want that. And it's like, it's not a elective, it's required if you get a mortgage. You got to have insurance. But there's different people that qualify for different things. How do you come up with rates? What determines somebody's rates on insurance?
Yeah, that's a great question, and people ask that all the time. And the biggest thing is I'm the agent, right? So I'm not deciding any rates. It's not up to me. But the best thing about the way we do it is we have all kinds of different options. So one carrier, they might like a suburban home, in a neighborhood. Another carrier might like rural properties. Another carrier might not like flat roofs. Another carrier might prefer homes in downtown Chicago. It's up to different carriers. So the great thing is I've got like 35, 40 carriers, and I can shop all those carriers for you and your clients, and I make sure with somebody that actually wants your business is not going to overprice it. Because if the carrier is not comfortable with a certain property, they're going to charge you higher rates. So I'm not like trying to put my customers with any certain carrier that may or may not want that certain kind of business. I want to make sure that your clients are with a company that wants your business.
So once you find a carrier for a customer, is there anything that they could do on their end that can adjust some of the premium or something?
Right, no, that's another great question. So you're probably familiar with a credit score, right? So that's your world. We deal a lot with insurance scores. One of the ways that a customer can affect that insurance score is making sure that they're mindful of how they use their insurance. One of the things I try to teach my clients and just let them know is anytime you call your insurance company, they're going to put that in your history, and then every other company knows about it, right? So if you call your company and then don't even make a claim, it goes on your history as a $0 claim, so that affects your rates going forward for the next 3, 5, 7 years, depending on the carrier. So that a lot of people don't know that, and it's something I try to make sure all of my people do, so they know that insurance is for an emergency. It's not necessarily a savings card. So if you have a flat tire, just be mindful. You can use your insurance, and maybe you have to, but it's for emergencies and it might cost you, some money in the future.
Okay. And can they pick different deductibles that might change their premium?
Yeah, that's a great question too. So we have some people that choose really high deductibles, and high is like relative to the person, what they decide,
Right.
Some people that choose no deductibles, like zero. So if you have $0 deductibles for your auto, not necessarily for your home, the insurance is going to be expensive. If you have a deductible of several $1,000s, the premium is going to go down a little bit because you're responsible for the deductible yourself.
So what I usually look at is you're talking about $100,000, $200,000, $300,000 asset. When you have a $2,000 or $3,000 deductible, that's really not that much. If you have a fire and maybe it's going to cost you $50,000 to rebuild, $2,000 or $3,000 isn't that much on your part for the amount that you save over the life of that policy. So I personally, I have, I don't know, $300,000 home and about a $3,000 deductible.
Yeah, no, that makes perfect sense. So the way I look at it is that we are paying a smaller amount of money to make the insurance companies carry the risk.
Right.
So that's how I look at it, and it's I have like $1,000 deductibles. To each their own, right? But whatever you're comfortable writing a check out of your checking account if there's an emergency.
Yeah, and I want to get a good premium and I want to get good coverage, so I try to marry the two. Anyway, do you have anything else you'd like to tell us today, Corey?
Yes, I guess just make sure you understand how you're being covered, and when I see people that are most upset with their insurance companies, I would say 90% of the time is they don't understand how they're covered. So I encourage that my clients, I said, look, I can get this done for you really quick if you want, but if we do it really quick, I might not be able to explain how you're covered. So if we take some time, it might save you, some problems, a couple of years, 5 years, 20 years in the future, if you know how you're covered.
Fantastic. And if anybody wants to get a hold of you, how do they get a hold of you? And I will put your contact information down below the video.
And I appreciate that. So number is 630-487-2585. Corey Prickerberg is my name. Facebook, all that kind of stuff. And if you post my contact information, I appreciate it.
Fantastic. Well, it was great to see you today.
Thank you.
Take care.